that sound means that we are now live here on our halftime report, our daily show where we break down all the market action one bit at a time, charts, news, corporate items, whatever it is from an economy perspective, analyze it and give you guys some insight that we are looking at out there so you can better run your daily routine. Markets are down sharply here today, guys, on increasing COVID cases, potential restrictions out of France, Germany, many places in Europe and the US, no stimulus, and earnings reactions, including Microsoft after the bell yesterday. We will look at all of the action here today, break it down one step at a time. If you're a veteran of our channel, as you're coming into the show here today, hashtag Team Tackle right in the chat. Appreciate it. Love the lively chat here lately. Let's stay positive, stay focused. Let's have a great conversation today. I got a full panel here today. We got Coach Tyler Craig, the great, the wise, the powerful, the architect, sporting a mustache over there. Tyler, how you doing today, sir?
I'm good, Tim. Just got back from vacation and I'm rested, excited to be back in the saddle, and a little ticked off. You guys jacked up the market while I was gone.
We jacked it up, and then now you're bringing it back down. So you come back from vacation, bring the market down. I see what happens here, Tyler.
I said the wrong word. Okay, you jacked it down then. I'm mad you pulled the rug out from under it. It was fine when I left.
That's right. That's right. Then we got Matt and Mark as always. Matt, how you doing, sir?
I'm doing great. The market is obviously not very pleased with the ongoing conversation that's happening on Tyler's chin.
That was good. That was
good, actually.
Thank you.
Wow,
Thank you.
coming
Thank
in
you.
strong on that
Thank
one.
you. Thank you. I'm sorry, it was too easy.
Shots fired.
Hey, I'm happy. I'm happy to be the punchline on that one. That was good.
Hey, real quick, Tyler, bring your mic down. It's up by your ear right now.
That's not it. It's this mic. But,
oh, okay.
There you go. Yeah, there you go. By the way, Tyler, on the ongoing conversation that Matt's referring to, we are having No Shave November, at Tackle Trading. So grow that mustache out, grow that beard out, get the whole thing kind of rocking. I think it would be perfect.
Dude, I can't do this. It's nothing. This is all I got.
That's the old Joe Dirt look. I got the same thing, my friend. Marky, how you doing, sir?
I'm doing okay. I'm a little, big red candles, right? 3 in a row. I'm okay, but I'll know how I am today on Friday.
I get that. I mean, you're obviously thinking about all the different scenarios that may play itself out. Mark, I'm going to start right with you. You've been talking about a risk-off type of environment here in front of the election for some time. We're now seeing the technical breakdown. Matt called it on Monday when we broke down below moving averages. We failed to secure the pivot right there. The swing trading was off for the week, pretty much from the bullish side. We're seeing the prices come down here. Mark, as this is playing itself out here on a Wednesday, 4 trading days left before the election till we figure out who our next president is. How are you approaching the market action?
I'm approaching it from an investing standpoint only. Now, I'm not a short trader. Shorts out there and bearish traders, they're going to approach it from a different angle. If I see a day trade, I'm going to take advantage of that. So for now, for probably the next week, it is a day trading environment for me. It is a long-term investing, how am I managing positions environment. But I'm a no bear kind of guy though. So on the bearish breakdown, bears might have a good time this week with that. So, that is how I'm approaching it. And there's so many ways this can play out over the next few weeks. But what is concerning, and it was concerning heading into this week, it was concerning on Monday, that if that technical level broke it down, if you broke that 3,400, if you broke those moving averages, if you broke that Fibonacci extension, that you were in a pocket of clear air. And pockets of clear air, things can get really, really crazy. It's why you study. Even if you don't swing trade, it is why you need to become proficient at technical analysis, because it will help you with your investing. It will help you with, do I roll calls down? Do I sell naked puts? What do I do with existing positions? Do I add protection? So knowing technical analysis doesn't just help swing traders. It is very, very helpful for long-term investors. And that's where my head is at for the next week is all right, do I have too much exposure? What happens if this spins out of control? Another 5-6%? What happens Am I okay? Do I feel comfortable with the investments I have? Do I have too much exposure? These are the long-term investing, and I'm sure we're going to talk a lot more about that as we go on, but that's where my head is at heading into the next week.
Matt, let's bring you in here next as well. There's obviously a lot of themes developing in the market. You've got now pretty much very clear that we're not going to get a stimulus deal before the election. We've been talking about that now for a bit. Obviously, we've got corporate earnings reactions we're going to get to later in the show. Rising COVID cases as well, which are catching the headlines more and more, and the consciousness and the conversation of people all over the world. Quite frankly, I'm hearing it more, not only from media, but also just the conversation is increasing as well. And then just this technical breakdown here, Matt. Where are you seeing these markets right now? What are the catalysts driving this, and just general kind of thoughts first?
Well, I mean, I think there was an answer within the question. Where are the catalysts? That's the problem. There's not a catalyst. There's not a theme developing. And Mark, over the last 7-8 months, as we've been in a halftime show, we've talked about these themes that have developed. Correct? I mean, just list out some of them.
I mean, we've had the reopening thing.
The economy reopening, okay,
the economy reopening thing. We've had at the start the stimulus,
the pandemic theme, the stimulus,
the COVID theme. We've had a couple stimulus themes. One back in March, April, we had the Fed unyielding support theme, that the Fed was there no matter what they were going to do. They're going to buy corporate bonds and they were going to stay. So we've had several themes emerge this year.
Okay, and when we've seen some of these pockets in volatility get, where the market seemingly gets crushed in the short term, it's when you lack some of that theme, right? And over the course of the last, week, 2 weeks, as this bullish retracement in the market formed up until yesterday, that market a theme, okay, stimulus, right? Well, then we had, maybe positive earnings. We had these themes starting to develop, right? And then they didn't come through. Stimulus didn't come through. Earnings didn't come through. And when the market yesterday, on Monday, when the market violated that 50 and the 20-day moving average, violated 3,400, we said it was a failed breakout. And we said, okay, there's only really one scenario that could really kind of stop this from being that failed breakout. And that's if the market recovers in the extremely short term. And then you can still look at the same degree of triggers. You're within that zone of support. Yesterday, you had a little bit of slowing momentum. The selling pressure picked up on the back half of the trading day there. But last night, it was fascinating watching Microsoft's earnings last night, because I've been talking about it in the last week as we've been getting into earnings season about, something I've been seeing is that the market has not been buying those earnings. And it's fine when the market doesn't buy earnings when earnings are bad, but earnings so far has been fairly decent. And then last night there was kind of a twofold that really kind of showed me that the market is just done in the short term, guys. They're done fighting in the short term. And I think that's what's kind of happening here today. Is the first was Microsoft's earnings. And we'll get into earnings roundup here in just a little bit, but Microsoft's earnings were really, really good, guys. They were, when you look at just from an overall numbers perspective, $1.82 EPS number versus the expectation of $1.53, a really good, healthy beat on Microsoft. Growth all over the empire of Microsoft. I think, they were up 12.4% year over year growth total, but some of their cloud-based businesses were in the 45 to high 40s in terms of percentage growth. And so there wasn't really any shade. And I know the headline news gave it a little shade, but I'm not going to do that here today, because there was not any shade on Microsoft's earnings. It was a fantastic earnings report, in my opinion. And what happened on Microsoft? If you'll go down to the intraday analysis really quick there, Tyler, give me like a 5-minute chart or something along those lines. Okay, if you're looking at this, Tyler doesn't have the extended hours on, so he's just showing the gap. But if you'll look at that, guys, when earnings were actually announced last night, there was hardly no price movement. There was hardly no price movement, and Tyler's adding the extended trading session. But when you look at that initial announcement, look at the movement. Hardly nothing. It wasn't until the conference call to where you actually saw this. And when I saw Microsoft's raw numbers at $1.82 versus $1.53, when I saw it at 37.2 versus, the 35.7 in terms of expectation, a beat on EPS, a beat on revenue, and crickets on Microsoft, a $1.6 billion company, the first of those big major tech companies to report this week, with the market clinging to the support, a battle zone that it has been fighting for a week and a half straight, and crickets. And I literally wrote on Twitter just right then, I said, in the short term, it's over. The market has lost the flavor of buying. They've lost the risk appetite. And then you couple that last night at about 1 a.m. our time, 3 a.m. in the morning. And if you'll go back to the S&P 500 futures chart there, Tyler, last night you had with the market failing to buy Microsoft's earnings report. You then had last night at about midnight, 1 a.m., which is right when Frankfurt, Germany opens up. That's right when the Bank of London opens up. So we're talking about the currency market. And when the currency markets open up from a bank open perspective, that's when you see these economic reports. That's when you see these economic projections. And there was a report that came out last night that Germany was looking to lock down their country for an entire month due to rising cases in COVID. Then France, an hour later, announces that they are going to perhaps lock down bars, social gatherings for at least a week. And you couple that in America, where you've lost the stimulus theme. There's been no other theme that had the ability outside of earnings to overtake that with lack of stimulus in front of earnings. And I just felt last night, 1 o'clock in the morning, I'm sitting there looking at the market, and I just felt like in the short term, the market's lost the buying desire in the short term. They're fixated on the uncertainties of the market right now. And then until those uncertainties before they become a theme in the market again, which will not happen, in my opinion, until post-election, this to me is one of those weeks where it's kind of like a throwaway week. You have major earnings here this week. You have a major election on Tuesday. We got 4 trading days between now and then. I think we start getting a lot more certainty post-election. And to me, it's not surprising at all that we're seeing a big red candle here today. The market has lost the buying momentum in the short term. Now, again, that can recover fairly quickly, right? That can recover fairly quickly. We do have a major event on Tuesday. But as of right now, this market has lost that short-term buying momentum.
It's a no buy day. And Matt, quite frankly, I think that you, in terms of an analysis and identifying these earnings reactions, we're kind of first on this one. I didn't see this in the major media for the start of earnings season for a couple of weeks. You've been talking about this for a while.
No. I called it last week. Yeah. It was only today that I started seeing that in the actual major headlines, and that was post Microsoft. But that's the easy analysis. When you see that happen on Microsoft, that's like, oh yeah, everybody sees that one. You see it coming in, you're prepared for it.
Absolutely. And you've had our team prepared because of that. I do appreciate it. Tyler, how are you seeing this no buy day, the analysis Matt's talking about? We'll get to COVID as well just in a second. Mark, I want to get your take on that from the catalyst perspective. From a technical perspective, now that you're watching these reactions, Tyler, the overnight action last night on Microsoft, the S&P selling into the open and then through the open here today. What's your read on the chart here, Tyler?
It's real quick. That was quite helpful. I've been gone for a week, and I didn't even know Microsoft had earnings yesterday. So that was a very helpful, insightful 5-minute recap of where we're at. No, I appreciated that a ton. So I didn't know we had all those catalysts. I didn't know Germany and France were shutting down. That is a perfect example of how, Matt, I know a lot of times you talk about the narratives and trying to identify kind of the why behind what's going on. Yeah. That helps put this in context a lot for me, actually. So,
as a pure technician, and that's what you are, correct? You are a pure technician. Sometimes especially when you're gone for a week on vacation, because I don't know about you, Tyler, but when I go on vacation, I go on vacation.
Right. Yeah.
Like it's and that's more my wife than me. She forces that.
Right.
But like it's not check stuff. It's not check business. You know, I'll call Tim and we'll just speak in code a little bit. But sometimes when you come back on vacation, it's like, wow, you're waking up to a new world to a certain extent, right?
Right.
Especially in this market condition. And Mark, I know you're certainly like me on that, but causality and causation, or like Tyler, you said, the why of something, it just, for me personally, it just gives me so much greater confidence in the technical movements that I understand the logical rationality behind the market.
Right. Right. Because the reality is, whether or not I could, and there's no way I could have spun as good a tail as you just did because I've been paying attention. But whether or not you knew everything that Matt just said, the fact is, from a technical perspective, we have broken the 50-day moving average. We have broken prior support. The short-term trend is no longer up. We have invalidated that breakout above 3,400, which was part of the reason why we would have been a lot more bullish in early October. And so it does leave you with a bit of a challenge to make any kind of bull case at this juncture. The one thing I do want to mention a little bit about the VIX at some point today, which is spiking quite a bit. A lot of fear coming in here. But as far as the S&P, I don't see anything till like 3,200. I think that's your next major level. And ultimately, I think that's the downside target before I'm really interested in trying to bottom fish here. I mean, you could say the market's oversold after 4 days. The VIX is up 40, which is quite extreme. You are seeing extreme levels of fear and panic, but from a charting perspective, 3,200.
Can I ask you a question?
Yeah.
You know, and this isn't about, okay, what specifically is happening right now. This is more in terms of general. When you're sitting down, Tyler, and you have something major in front of you, 4 or 5 days in front of you, right? Mm-hmm. Call it an election, call it an earnings report, call it whatever you want. Any moment that has the ability to impact price in a multi-directional capacity that you don't know. Right. And can we all agree, guys, that we might have our historical data coming into the election? We might have what we think might happen, but anything that happens on election night, would you guys be surprised?
No.
Anything?
No.
Skyrocket. If it skyrockets on election night, would you be surprised?
Wouldn't surprise me.
If we limit down on the overnight action, would you be surprised? Okay. I'm in the same boat then. Okay. So you have this moment coming up where nothing would surprise any one of us, right? We don't know how the market's going to handle a very uncertain moment called in the national, election. How do you handle going out and hedging yourself? Because even though it might be a no trade week, right? Outside of day trading, there's still wonderful day trading environments. But outside of that, how do you go about hedging long-term portfolios with the VIX at 40?
Well, I think Tyler and I are going to have different takes. I'll let Tyler go first because
yeah, go ahead, Mark.
Just because of how we position. I mean, I am a deep discount guy, and that's where I sell puts. So how I handle that, and that's causing me a little trepidation. I'll get into that. But Tyler, I'm sure you have more long exposure than I do.
He does. Tyler has more long equity exposure.
How are you handling the long equity exposure?
So for me, this is where it's very comforting to know that you're comfortable with the exposure you have, because the market could go down 30% and I'd be fine. Like it goes back to like, I don't invest money I need next month. I don't invest money I need next year. I invest money I don't need for years and years and years. And so ultimately, like I could come back to, I don't hedge at all. I don't do jack. I'm just comfortable with my exposure. Whatever happens post-election will be just like March in the sense that it will be temporary. Yeah. And as long as I like the companies I own or mostly for me, it's ETFs, it's temporary. I focus on the temporary nature of volatility in the market. And that's something that I am embracing and comfortable with. So even before I even get into selling calls or buying protected puts or whatever, when you start from that powerful position, it's like, I don't even care what happens. If we go down a bunch, great, easier. I'll buy more.
Yeah, it makes it, when you're comfortable with risk, it makes everything in life easier. No doubt. That is right. But I also know you will hedge a 30% risk.
I'll be selling cover calls for
Okay,
sure.
So
Yeah.
that's my question. With the VIX at 40, it's tough to go out there and just buy short-term insurance to cover a portfolio with the
Correct.
VIX at 40,
You know,
right?
Matt called for it. Bring up the VIX and let's do it.
No, well, basically all you can do
I will save my obvious disagreements with this chart because my point is the same.
yeah, but basically all you can do for somewhat directional risk exposure when the VIX gets this high is to do spreads. And they don't offer you total protection, right?
Right.
But that's about all you can do because this a spread, a bear
Specify
call.
that, Mark, just to clarify, because a long put obviously is a hedge, but you're talking about a bear put spread. Is that
I'm
correct?
talking about bear put spreads because
Yeah.
if you just go out today and say, I'm going to buy a put to cover whatever it is. Let's say I own Microsoft and I'm going to go
Tough to
buy
buy
a
insurance
put.
when the dam breaks, guys.
Yeah, I mean, you are in the totality of the next 30 years, it's a losing proposition.
Yes.
Now, if the market goes down 30%, well, in hindsight, you're like, I should have. But it's a losing proposition, in my opinion, in the next 30 years if you're buying puts when the VIX is at 40.
Oh, absolutely, 100%.
Now, what you can do to help hedge the volatility is to do bear put spreads in which you're buying the higher strike put and you're selling a lower strike put to give you some that lower put still has high volatility too, right? And so your put spread at least gives you some protection to the downside, and you're not getting killed on the volatility like you would be normally. So, I mean, that's just where you're at when this happens. That's just where you're at when this happens.
So I heard a couple things there. I heard exposure and portfolio design from Tyler. I heard covered call writing to bring in cash flow and to offset some of the delta risk you're taking. I like the bear put spread idea there, Mark, as well. But Tyler, I did hear something that you kind of went through pretty quick. You also have cash on hand at specific lower levels. You would buy more. Is that right? You would dollar cost in?
Yeah. I mean, look, what you have to look at is stocks as an asset class versus cash versus bonds. It's like, what else are you going to do with your money? I mean, I think ultimately, I don't know that we're ever in a position where I'm not interested in buying stocks, like fundamentally. So naturally, if I have this predisposition where I want to buy stocks as an asset class because I want to own the greatest companies on the planet at for long-term investment, then ultimately, I welcome another drop. I mean, all of us are mad we didn't buy more in March. There's no doubt about it. And so, you set up a plan for the next crash or the next downturn. I think you always should have some kind of process or plan in place where you are systematically putting money to work when the market's 20, 30% off the highs. I think that is a fantastic long-term plan. It's always good to buy stocks for long-term investments. It is very, very good when we're down 20, 30%.
Back on the S&P for a second, though, because and I'm glad that we're talking about this. I think this is the conversation we need today. But Tyler, that's not today, is it, on a falling knife? I mean, without a technical, some kind of slowdown, momentum shift, you're still, even with that mindset, that may play itself out over the next several months, right? Not necessarily in the short term on swing trading.
Well, yeah. I mean, you have to decide. You have to decide either A, I'm going to get in at set intervals. Like you could say, look, I have no idea when we're going to bottom. I just know historically, the lower we go, the closer we are to the ultimate bottom. So I could either just say 10% off the highs, I'm going to put some in, regardless of what the chart looks like that day. 20% I'm going to put a little in, 30% I'm going to put a little in. You could totally punt on the question, is the market going to go up tomorrow? Who cares? I'm putting this in for 3 years, 5 years, whatever. And I know down 10, down 20, down 30, those are good intervals to put some money in. You could do that. Or to Tim's point, you could say, I have my alert, market's 10% off the highs. I am now interested. I am now in buy mode. Now, all I'm waiting for is a technical reason to put the money in. And if today you hit your alert, are you excited to buy it when the market's in a 5-minute downtrend at the low of the day? No, you really don't have much evidence right now. So yes, Tim, if I was waiting for a technical catalyst right this second would be kind of a gutsy play to hit the buy button.
Yeah, it's a no buy day in that regard. Mark, any other thoughts for the long-term investor out there?
It's the whole buy the dip crowd, right? I see Dave Portney out there, and he had red candle 2 weeks ago, and he's like, buy the dip. And it's just such a naive way to approach every time there's a red candle to buy.
Yeah, he should stop talking about the market and just focus on gambling.
I mean, he should, because it's like, all right, I bought that dip, but do I have any money to buy the next? All right,
Yeah.
and that's what Tyler's talking about not being greedy. And we talk all the time about not being over leveraged, right? I remember, Tyler, you and I were doing a show by ourselves here a month ago when the market was going down a little bit. And you and I were both talking about this exact same concept, is that as the market goes down, do you have the cash? Are you putting any stress? I mean, how stressed do you feel today? To me, will tell you two things. One, your experience level, and two, where you are on leverage. If you are freaking out, you are over leveraged today, or you're just brand new and you're not used to volatility.
Yeah.
It is so critical from a portfolio management standpoint to be greedy. Fine, right? You're buying stocks, you're buying a risk asset to begin with, but if you don't have the capital, if this market were to tank 20% and you don't have the capital to buy a little bit more, you were stretched a lot in that situation. One day or 1 week should never cause you sleeplessness. It's the old sleep test, right?
Yeah.
I went to bed, I got a full night's sleep. I'll go to bed tonight, I'll get a full night's sleep. Now we got another red candle or two like today. Well, I'm going to have to do some math, right? Even with lower naked put levels, just to make sure I'm okay if the worst happens. If I'm put everything I have a naked put on, what does that do to me? If the market goes down 15% in my portfolio, where am I? I mean, don't be in a position where at some point in the next week, if it does spin and we don't know, it's like Tyler said, the market could stick support at any point. You don't know that. We don't know what happens, but you don't want to be in a position in the next week that if things just domino a little bit, you're getting those margin calls. I mean, that means you are stretched way too thin.
You know, Matt, one comment in the chat here, I want to make sure that you talk about a little bit because Greg brought up an idea about shorting with futures contracts in a high VIX environment. And that is definitely for advanced traders, definitely a tactic you can use that takes the volatility risk out, correct?
That's a strategy I would use if you understand the futures market, number one, have day traded in the futures market, number two. And it's a strategy you can use on overnight actions on anything, whether you're talking about an election or when you're talking about a key economic report. So, you know, like the election next Tuesday night, it's not like a lot of other economic scenarios that come out. We have an expectation, we have a time that's going to come out, we know how the market's going to respond if it beats the expectation versus typically if it misses the expectation. All of that is pre-planned. On something like a Fed day, for example, it's not a singular moment in time, it's a zone of time. So you have like a 2-hour window where the market's going to react to what the Fed, you know, has to say in both the statement and then what they say in the press conference. On election night, guys, if you guys remember 4 years ago, it was crazy. It was crazy train. Absolutely. I mean, it, you know, went down 5%, went up 5%. It's one of those moments where it's like a 10-hour window, right? And so if you're an active trader in that environment, it can be fairly lucrative. There's no doubt, but you got to have the skill set in the futures market to be able to do that.
Absolutely. Absolutely. All right, guys, love the conversation here. Let's keep moving through the show if we can. Tyler, can you flash through all the different indexes?
Hold on, Eli. I understand your emotion about that, but that is just simply not the history of the market in any capacity, my friend. No, yeah. Don't buy into the political nonsense. The market will focus on a theme. It will embrace that theme. It's about the sectors. It's not about the market itself. It's about the sectors.
Mm-hmm. Mm-hmm. Tyler, flash you these technicals if you can.
Yeah. I see right now most of these indexes are lining up pretty close. So NASDAQ took out the 50-day moving average today. Obviously, Microsoft's going to be a big driver of tech, and it's at its lows. NASDAQ's at its lows. Nothing good happens below the 50-day moving average. Bad neighborhood. I would echo everything I said on the S&P here. I think this has got room down to the pivot low in September. That's your next major support zone. For now, trend is down. Small caps, down almost 3% today. This might be the most unfortunate deterioration because of the fact that we had started to see small caps place catch up, and now it's like, no, screw you guys, back to shutdown. You guys are toast. These are the most sensitive to the economic reopening theme. Small caps took out support, taking out the 50-day today. Kind of a messy chart now, but the trend is down. So that's got room to go. I don't know. This one's been pretty choppy though. Down 3%, not anything to scoff at though. Those are your major indexes. What do we go next? Oil.
Yeah, let's take a peek at oil. But before we get into oil analysis, I do want to get one thought from Mark that we didn't. I don't know if I finished or got completely his ideas on this. Mark, Matt did bring up some of the COVID data earlier. Before we move past the broad markets, do you think that could become a driver moving forward as increasing cases and hospitalizations and shutdowns are playing themselves out?
Listen, when you're standing on a balancing beam, it don't take much of a gust of wind to blow you over and knock you off it, right? Market's on edge right now. And, going back to March, there was, and part of the COVID theme was, as cases in April, as things started to plateau, is second wave, winter, COVID gets bad, it might get, and then of course, everybody just forgot about that for 6 months, right? 5 months, 6 months. And, we're heading into a winter. Hospitalizations, President Macron in France cited hospitalizations in France as being one of the reasons they're looking to do a temporary shutdown. It goes back to flatten the curve. We know from viruses for decades and decades and decades that they get worse in the winter. And so with that vaccine still, everybody agrees that is a first quarter, second quarter best case scenario on a vaccine. And so with President Macron, Germany, hospitalization data here in the United States, it's probably not going to get better, right? It's probably not get better. And Matt and you and I were talking pre-production, and we all agreed 100% that was the catalyst for today's price action. And I think moving forward, unless another theme emerges that Matt was talking about, unless another theme of, hey, stimulus talks, we're coming back, or the Fed comes in and does something right, the Fed come in and say, or maybe for a short time, a clean election might help. But if you don't have another theme emerge to offset the negativity of COVID, that's not a good thing.
Yeah, it's becoming one of those drivers, no question about it. Tyler, let's do flash through commodities next if we can. I want to get to corporate news, earnings roundups, and we're going to talk tech here in just a minute. But take a look at crude oil first if we can here.
So this obviously is sensitive to the economy, reopening, shutdowns, all that jazz. So the recurring theme today is anything sensitive to that's getting smoked. Down 6%. That's a pretty big red bar. So does it change the outlook for oil? No, this has been chopping in this dopey range for 2-3 months now. But look, if it can't hold support this go around 36.50-ish, 36 to 36.50, this has been a stay away for months. Today does nothing but simply reiterate that.
Mark, you've been calling for a range in crude oil for quite some time. It's been that way. Matt, it's been neutral. We've been analyzing for a long time. When you have a sharp sell-off into support like this, though, Mark, I mean, you've been looking at like a 35, 36 floor here for a while.
This is the
How do you approach it?
This is the third. Now, I have very clear rules on this. And this is the third sharp move down into the support zone, right? Not just little bitty. I mean, sharp moves. We had one at the start of September. We had one at the end of September. We're now having one at the end of October. Now, I love ranges more than I love trending charts. It's just who I am. Now, the type of sharp move down we had the first time, right, where it comes down and then there's several days down, and then you get a reversal signal off that, that's where I play those. The second one down, we have a sharp move down and then it just skyrockets up. I miss those 100 out of 100 times because I want more confirmation. And the level of your risk tolerance will tell you how much extra confirmation you need. Sharp, big, red candles heading into support should, in my opinion, never be trifled with. Never be trifled, because if that support gives out, there ain't any support underneath it.
Yeah, there's a lot of clear air underneath that for sure.
You know, and so, like, you know, as a bottom feeder, in commodities in particular, give me a week like we had the last time. Give me a post-election scenario, and then I'll probably buy support on confirmation. But man, there isn't any support underneath that, and so you have to tread very carefully and have a plan if you have oil-related assets. If support breaks on crude oil, what is your plan? It's just like when the broad market broke.
Let's talk about that plan for a second. Switch to a weekly chart on crude oil, please. Now, when you're looking at a weekly chart on crude oil here, tell me that's not an easy short under 36.5.
It's the easiest day trading short. It's the easiest swing trading short. It's
position
trading short.
Okay,
I was getting ready to
list them all. But couple that with an environment where you have Germany looking at lockdowns, where you have France looking at lockdowns, where you have rising cases and hospitalizations in the US, where we're most likely will be talking about lockdowns at some point in the next 2 months, guys. Now, the extent of those lockdowns, that will be the debate, but we will be talking about them. And whenever we've talked about lockdowns in the past, that's not good for crude, guys. Not at all. That's terrible for crude. It's terrible for crude. You talk about a demand problem in that environment, limited supply. Crude could get ugly in the short term if you don't see a theme emerge in the market, guys. And so if you're looking at, you know, ways to add bearish delta based on you know what we're seeing in the data from COVID, crude could get smacked pretty hard here. Now, if the market recovers, crude most likely recovers with it. But if the market even stagnates, crude could still get beat up. So, you know, I'm looking at that daily chart, and obviously you got to be concerned with that 37 handle getting beat up. Intraday, it's starting to show a little bit of bearish momentum, showing a bearish pattern on the daily. You look at perhaps, you know, it breaks down on the intraday at 37. You should see some movement to the downside at that point. From a daily perspective, you break out of 37, you should see some stop losses get triggered to the downside. On the weekly chart, if it breaks down out of 36.5, there's really nothing left there. Now, obviously, it goes without saying, you know, Saudi Arabia could come out literally next week and be like, you never bet against the block. You never do that.
Not bet against the resolve of the kingdom.
And you know what I have to say about Saudi Arabia when that occurs. So I'm looking at this and I'm saying, okay, if this market does not adopt one of those themes, you know, and it certainly still could. Earnings certainly still could be a theme the market adopts. The Microsoft announcement from last night is very, very concerning in the overall market, that it did not, that type of report on that type of company didn't, you know, give the market the mentality to go buy. Could that change with Apple, Google, Facebook, and Amazon? Absolutely it could. But so far, that's not in the data so far. So could that be a theme that emerges? Yes, it could be a theme that emerges. Post-election, could we see certain themes emerge again? Absolutely. You could see that post-election, guys. There is a lot of scenarios, regardless of what happens with the presidency, regardless of what happens with the Senate. There is a lot of scenarios where we'll be talking about stimulus and how big that stimulus number is starting next week. So there's a lot of scenarios where the market could adopt a theme, but in the vacuum of no theme developing, in the environment of rising COVID concern around the world, you're talking about a world-based commodity, not a US-based commodity. It doesn't matter what the US does from a lockdown perspective. If Europe's going to start locking down a little bit, I look at this from a technical perspective, and I see a lot of weakness if that weekly charts, support level gives out, guys.
Mm-hmm.
Somebody give me the buy. Somebody give me the reason to buy outside of just some hypothetical theme on crude oil.
I don't see one technically. I don't see one from sentiment. The news, I don't see as a driver. I mean, you've got a hurricane come through the Gulf, but that's not really played itself out to be a
hurricanes are
catalyst.
Oil's very, 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 very used to hurricanes.
Yep. Yeah, I agree. No, technical weakness for sure. And this support zone is definitely in play. And Matt, I think if you get a breakdown, there's tons of clear air to the downside. This chart is getting interesting if you're a trader, at least from that regard. I know it was stuck there in the mud for a bit. Anybody else got anything on crude here?
No, the energy sector on the stock side has been bearish forever. So this is nothing new from the sense of thinking about bearish trades in the energy sector.
Yep. Gold next, if we can. And obviously, Matt, I'm going to bring you in here first on this one. We were waiting for this pattern developing with the risk off sentiment here today. Gold is now down with stocks down 1.7% or so. Matt, how are you reading gold here? You still got a pivot point in play at 1850. Obviously, risk off today. What's your read here on gold?
No, this is one of those days on gold where it's a no buy day in the marketplace, and we've seen those days in gold. We've seen those days in the marketplace. In my opinion, yeah, it does throw off the analysis a little bit. You need a little bit more time to kind of let this set up, but I don't have that. I don't have a similar read on gold today as I did the last time we saw support give out and the last time we saw, volatility to the downside. I still think that 1940 by 1950 breakout is legitimate. I still think, if you can get above the rising 50-day moving average, there's buying opportunity. And you're sitting very near that support level at 1850. That's fairly important. So you're not looking to buy the dip here on gold, but you weren't looking to buy anything until you saw that breakout. And so with the analysis leading to a breakout, it doesn't matter if we're looking at gold. It doesn't matter if we're looking at Zoom. It doesn't matter if we're looking at Apple. It doesn't matter if we're looking at General Electric. If you have a resistance level you're comfortable buying above, and it doesn't break that resistance level, you're not really doing anything. There's nothing really to update because you're not looking to buy at 1850. It's a little bit of a different analysis on that. Now, if 1850 does break, you are looking at buying at that 200-day moving average right around 1800 to 1770. You're looking at that zone saying, yeah, if it breaks, good, give me more depressed price action. Give me that market down to 1800. That is a beautiful buying opportunity at that point. I don't have the same thing to say at 1850. So, if it does continue to sell off, I think the zone we're looking at as a potential buying on the buy the dip mentality is that 1800 level. If 1850 holds, I still think you're looking at that potential breakout above the 50-day moving average.
Mm-hmm. The dollar next, if we can here, Tyler, then Bitcoin, then we'll start talking stocks, kind of going through our process as we always do. Dollar's been neutral for a long time. Little pop here today on, all the market action, whatnot. Move to cash makes sense to me. Matt, anything you're seeing in the dollar besides neutrality?
No, I called it a month ago. I was going to go neutralities. Been going neutrality. In neutrality, let the dollar can go to neutrality for months and months.
Months and months. Bitcoin here next, Tyler, and I want to get your technical read on Bitcoin. Obviously, we've got a no sell today in the markets and got a risk off environment. Bitcoin is also feeling that. It's down here today after a tremendous run. Tyler, what do you see in the chart here from Bitcoin?
I like that breakout over 12,000. Daily chart looks great. I don't think today, this thing had run up quite a bit. I don't think this is a Bitcoin dynamic as today's selling, that is, as much as it is, they just hit the sell button on everything as we've been talking about. So this wouldn't change my bullish bias. It's in a nice daily uptrend, nice separation of the moving averages here, showing that momentum's picking up. I think, look, if it pulls back towards 12,000, that's a nice little potential buy the dip opportunity. Quite frankly, if you weren't already in, you wanted a couple of red bars. I think you celebrate this retracement, and in fact, you hope for maybe another down bar or two. That daily chart looks good. Look, anytime you pull open a 1-year chart and the stock is on the top right of the chart above all other prices, there's nothing bearish about that.
Yeah. Matt, I think I'm reading it the same way Tyler is. If you were not in already on the breakout, we've been talking about these breakouts, the breakout at 11, breakout at 12, the way the momentum is run. If you weren't already in, you have to be interested over the next week or two if you do get a retracement on Bitcoin, I believe. Mark, any thoughts on Bitcoin? Matt, any thoughts on Bitcoin real quick here?
Well,
yeah, we talked about that 14,000 level being a major battle zone, and I don't think you would have saw the big red day on Bitcoin today if it wasn't for the entire market selling off. I think you're seeing the exact same thing on Bitcoin that you've been seeing on gold, at least just today. And so when the market sells, guys, it sells everything. Like literally, it sells everything. It's what recovers fastest in these environments. And so when you're looking at gold, you're really looking at that 1850 level to hold. When you're looking at Bitcoin, you got some intraday level of analysis, right there at 13,000, no doubt, but you're really looking at that 12,000 level as a potential, retracement that, if we do see a retracement down into 12,000, I promise you, we're going to be reading that as a bullish retracement. It's got to be, right? I mean, it just has to be. So, when you're looking at Bitcoin right now, and if you missed out on that nice little run up from 11,000 to, close to that 14,000 barrier, you're looking at this and you're saying, okay, it's a stay away from me right now, this very second. However, let's keep an eye on Bitcoin in the short term. Let's get it on a watch list. Let's look how this behaves between 13,000 and 14,000. Let's see if it can form some consolidation in that range between 13,000 and 14,000. And if it does, give that a good week to cook. Give it 2 weeks to cook. I don't care. Give that consolidation, really form that trigger at that 14,000 barrier. Because if you give this another week to 2 weeks to cook between 13,000 and 14,000, think about the beautiful chart on the weekly chart we'll start looking at with that potential breakout of that very key level of resistance at 14,000. So when you're looking at this in the short term, you're saying, okay, we're obviously overextended from a technical perspective. You're getting into that major level of resistance of 14,000. On the update yesterday, we talked about how 14,000 was going to be a battle zone. Obviously, with the no buy day today in the market, Bitcoin's taking it on the chin a little bit, but it's trying to hold that 13,000 level. The first form of analysis, we're looking at this as a potential high base type formation. Let's give it the time it needs to form that high base. That's number one. If 13,000 is broken, the plan has to be updated to looking at this as a bullish retracement or a bullish flag base pattern, where you're looking at where those key levels of support are going to form. In my opinion, out of all the different levels of support you can look at, you have moving averages, you have trend lines, you have Fibonacci projections. Those are what we call vertical levels of support. Vertical levels of support can certainly be extremely important in momentum conditions. Then you have more horizontal levels of support. Horizontal levels of support are previous levels of resistance acting as new support, or old support acting as new resistance. Significant whole numbers can act as, horizontal levels of support. Horizontal levels of support, in my opinion, are a little stronger and have a higher probability of holding than vertical levels of support. And so when you're looking at this, if 13,000 breaks, you're looking at this first as that 9 EMA and as that 20 SMA start to catch up to the price of Bitcoin. Those would be the first levels of vertical support I personally would be looking at on Bitcoin, is how it handles those moving averages. If it gets down into 12,000, which is your horizontal level of support, at that point, you're looking at that as a bullish retracement. So let's look at it from a high base perspective first. If the high base never forms, because we're very early into this, let's look at that as a bullish retracement. I think we're going to have a buying opportunity on Bitcoin. We've had two different very good technical patterns on Bitcoin in the recent history. The first, you had the symmetrical triangle breakout of 11,000 when it reclaimed that 50-day moving average. The second one occurred on the high base after the breakout last week. That was a wonderful signal there as well. Now we're looking at that next trade, the third trade in this trend. That to me is going to be the trade that we feel has the ability to create that blow off top. I don't feel that, and I know Bitcoin's up 30%, but I still don't think that's a blow off top for Bitcoin, because Bitcoin can absolutely fly. If we see that retracement form, if we see that high base form, at that point you're projecting above 14,000 in my opinion. So let's keep an eye on it. I do believe we're going to have a pretty decent trade here in the short term on Bitcoin.
Mm-hmm. Yeah, and whenever that cooks, whenever that develops, obviously we'll let the chart kind of dictate that. But I can see all of those scenarios being very, very interesting for me. I'm looking forward to see what happens with Bitcoin here over the next couple of weeks for sure.
And there's nothing like Bitcoin. If the whole market crashes and it's risk off for the next week, Bitcoin's going to get drugged down by it. The one thing I've been encouraged on Bitcoin though is that you're 2 out of 3 in counterflow relative strength versus the S&P 500. Like, you had S&P was down a little bit today. You had a big day. S&P was down big on Monday, and Bitcoin held its own. So, I mean, risk off is going to take down everything: oil, copper, Bitcoin, equities, Apple, Carnival. Everything goes down, right? It just does. But I mean, there is some relative strength in Bitcoin. So there is some relative strength in Bitcoin.
Listen, Mark, this is coming from me, guys. I have a stronger bias on Bitcoin right now than I do gold.
Mm-hmm. In the short term.
In the short term.
Yeah.
In the short term.
By the way, the market is dragging most things down today, not GE from earlier. We will be talking earnings reports. Why don't we make a transition here today into stock talk,
now,
Matt?
Tim, it's 2020, and your favorite company, GE, is holding the market up right now.
It is up. We'll get the analysis. Matty, do you want to do earnings or the news items first?
No, let's do earnings. I got a jet. I got a appointment I got to get to at noon. So let's already do earnings roundout, and then I'll let you guys finish up the show. Okay.
Sounds good.
All right, we've already talked about Microsoft's earnings. Let's take a quick peek at Microsoft yet again, though. I'd like to get Tyler's technical read on it. Microsoft's earnings, and again, I want this to be very clear. Microsoft had very good earnings, very good earnings. In any other environment, I believe Microsoft gets gobbled up in these earnings. Microsoft reports $1.82 versus $1.53. Revenue came in above at 37.2 versus 34.5. 12.4% year-over-year growth. When you look at the different aspects of what makes Microsoft, there was really nothing to be said here in terms of a negative report. If you guys remember a couple reports ago, Microsoft had the 47% increase in year-over-year growth in their cloud-based systems, and the market's like, oh, it's just not good enough. No, it's good enough. It's the environment that's not good enough. And that's what was Microsoft here today. Microsoft was, to me, the market showing its hand on this earnings, something we've talked about in the halftime report about how the market has not been buying up positive earnings. Microsoft is finally that big dot company that we saw, that we were anticipating, that everybody in the market was looking for as that potential catalyst. It came out there with a strong report. They provided slightly weaker guidance in the fourth quarter, and that was all it took for the market to say, we're not in the mood to buy. We might not be aggressively selling, but we're just not in the mood to buy here on Microsoft. Microsoft stagnates for an hour before the conference call, gets smacked down a little bit after the conference call. Once the market, however, I was anticipating Microsoft to recover a little bit on the overnight action, but once that market started selling aggressively, once the European cash open happened on the back of the news of, both France and Germany with lockdowns, it was kind of game over in the short term for not only Microsoft, in terms of the recovery on the overnight action, but I do believe that is the market signaling to everybody, guys, earnings aren't that important to us right now. We are laser focused on election. We're laser focused on COVID, and we're laser focused on stimulus post-election. And so with those overriding three themes that are causing a lot of uncertainty to the market right now, that has kind of left a vacuum in the market to a certain extent. it just didn't have that buying, momentum to recover on the overnight action. With the gap down here on Microsoft, Tyler, it looks very similar to the S&P 500. What's your technical read here?
Here's the thing. If I'm going to trade, if I'm going to swing trade off of a gap, it's got to be a gap into a price void or a gap over resistance or under support. When you gap into a congestion area like this, it's just really, really tough to have confidence in a trade. So from a swing trading perspective, there's not really much to be done if you're looking at trading Microsoft today. But what you have to do is you have to say, well, where could it run to after the gap? And when it's gapping into congestion, there's not a clear runway for this to go through to hit the next support. For me, from a trading perspective, it's hands off. I think it's more interesting when it comes to the lower end of its recent range, around $200. Then maybe we see what's going on. But I look back and I say, well, what did it do the last few times it was at 205? And the answer is it was choppy. So This is not actionable to me.
Yeah, and I agree with that. And from a long-term perspective, nobody, and I mean nobody from a long-term is getting out of Microsoft.
I will sell a naked put on Microsoft. Now, I target in the 150 to 170 range, just depending on how froggy I'm feeling that month. But Microsoft remains my favorite company, and that earnings report did not a damn thing.
Should not have questioned your belief in Microsoft at all.
And if you go and this is the thing about these deep naked puts, like if you go to the trade tab and look at those Novembers, right, on a volatility spike, you're not getting nothing for a 160. It's just, and this is what it comes down to for me in this market. If I own stock, what is a level that I'm willing to own that company at for many, 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 many years? And I would love at one point to pick up some Microsoft shares. Now, probably won't happen, right? Because I'm so cheap and I sell all of these things. But it doesn't cause me any stress today either. Because if it does happen, if the whole market crashes and I get put Microsoft at 150, which is where my naked put is, I'm happy as can be.
You're not getting put Microsoft at 150 in 23 days?
No,
not going to happen.
Either. I don't think you come off it at all, by the way, Matt. I love the analysis on the data and the numbers. I mean, they made $1 billion a week in September. This company makes money in cloud computing and gaming and all kinds of different segments. They're an incredible company.
I'm with you on that, but companies still make money as they go down 80% in massive bear markets. So even the greatest companies go down in massive bear markets despite whatever they make. Selling pressure hits everybody. I'm looking at this, and again, my faith in Microsoft is not questioned in any capacity. I love this company. It's one of my favorite companies in the market, and their earnings results were fantastic in my opinion. This to me is far more about the market than it is about Microsoft.
100%.
And the void that the themes that have failed to develop in the market has not given the market any belief in the short term with so little time in front of that election. So to me, this is all market dependent on Microsoft. However, one concerning aspect of that we should keep an eye on Microsoft in the short term is how Microsoft handles that 195 to 200 level of support. When you're looking at that on a weekly chart, you got a little bit of you got some technical reasons to be a little concerned in Microsoft. You're seeing a little bit of reversal patterns in Microsoft on the weekly chart. So again, I'm not questioning the fundamentals or the belief in Microsoft at all. I am questioning the technical condition in Microsoft. You're forming a little bit of a head and shoulders formation with support on the vertical level and horizontal right there between 195 and 200. So let's just keep an eye on Microsoft. We are seeing weekly reversal patterns in Microsoft. Those could end up being wonderful buying opportunities if never confirmed. So let's keep an eye on Microsoft in the short term, just on that weekly chart.
Mm-hmm. Good. All right.
Next. For solar, let's go to solar.
Been a juggernaut.
One bright area of the market here today is solar companies in general, and solar in general has been picking up a little bit of that bullish momentum, and you're starting to see it, start to, creep into that social conscious little by little as well in solar companies in general. First Solar today, First Solar comes out and they just reported a juggernaut, guys. Just an absolute juggernaut here. First Solar came in with an expectation of 60 cents on the EPS number. They came in at $1.45. Just utter destruction on EPS numbers. Revenue came in at 927 million versus expectation of 676. Utter destruction on revenue numbers. Revenue increased 69. Think about this number: 69.6% in year-over-year growth. Just an absolutely fantastic report out of First Solar. Buyers, long-term holders, believers in this movement, you're happy with the report. It's fantastic. Market, in my opinion, First Solar, we would be talking First Solar as a momentum play with the potential breakout of $100 if it wasn't for the weakness in the overall broad market here today. I think that could give us an opportunity on First Solar. Tyler, what do you see from a technical gap read here perspective? We did break out, shown a little bit of a massive range on the doji here. Where would you be looking at picking up First Solar from a trading perspective?
So this gap is a lot more interesting than Microsoft because you gapped above resistance levels, right? So from a day trading perspective, if you were watching First Solar this morning, I think it would have been an interesting bullish candidate. The problem on the daily chart right now is you have such a big wick at the top and the bottom that, I mean, you don't want to try to play for a gap fill necessarily because it's a super strong uptrend, right? So looking for a bear trade's tough. Looking for a bull trade on the daily chart with such a wide bodied candle is tricky. So I think if you're looking at this right now for the next day or two, you either have to let it cook for a couple of candles and see what happens after this wide body bar, or you have to go intraday to trade it because it's a wide body doji. I mean, again, I'm just struggling to find a good entry point here. So going to the 5 minute, let me take off the after hours. You go to the 5 minute intraday. And again, I'm reticent to go short on this bad boy because it's such a good uptrend. So you're more so saying, where's my next long entry? And again, the high of the day was so far away that you either look for one of these lower intraday resistance levels to be taken out and hope that you get a late day rally as a day trader, or I think you need to wait for another candle or two on the daily to get you a swing set up.
Yeah. The one thing I would be careful on, because First Solar is one of the 100 stocks I follow, and I follow it every day, and I would be very careful going into the election. One of the things that led up to First Solar's run was when, as Democratic sweep odds were at their height, their apex, where the JP Morgans were talking about it, First Solar had a really, really nice run, as did all solar companies. I think there's more election risk with First Solar than your average company. So I would be very careful heading into the election holding it.
Well, and First Solar can be one of those companies, and this space can be one of those spaces we're looking at depending on the election outcome as well. Technically, I kind of like it above 94 on a momentum play.
Oh, listen, if there is a blue sweep post-election, I'm trading, maybe not investing, but I am absolutely trading any technical signal I get to the upside on First Solar.
Yeah. Right, let's take a quick peek at MasterCard here. Oh, James, Mark has like 14,000 stocks on his 100.
Mark's James calling you out here.
It's absolutely 100%. Mark treats his 100 like the Russell 2000.
I do not overmatch. I match with 100 beautiful babies, 100 beautiful stocks. Now, sometimes I kick them out to move in a new beautiful baby. But,
all right, beautiful babies. Can anybody name the movie?
Yeah, can you name the movies? I got
anybody name the movie?
I'm just laughing.
Can anybody name the movie?
I don't have it.
Come on. 100 beautiful babies
buddy.
here.
Swingers,
come on, it's a beautiful baby.
On.
Swingers.
How do you miss Swingers?
Vince Vaughn, Swingers.
It sounded like a Will Ferrell
I'll get you a beautiful baby.
I'll get you a beautiful baby. Beautiful baby. Mark has 100 beautiful babies. Yeah. I still believe market treats it like the Russell 2000. But very quickly, MasterCard comes in at $1.60 a share versus the expectation 165, 3.8 billion versus 3.9 billion expectation. Both misses, revenue down 14% year over year. This looks like a sell on Microsoft, guys.
Mark, what's your read here before we get a technical read?
Yeah,
Obviously, these credit card
Microsoft
companies.
and Visa, like this is one of my favorite long-term investing spaces on dips of these companies. Now they've had some issues, both Visa and Mastercard, and on part because the earnings, Mastercard's going to make money, Visa's going to make money from now to the end of time. They actually bought back a lot of stock this last quarter. So they are very, very healthy financially. Those transactions, those overseas transactions, which are a high margin item for Visa and MasterCard, have been really soft this year, which makes sense with COVID and the economy, but they're really soft. They're getting punished. If whatever reason the market tanks 1 billion%, I really love these companies still. It's just be careful I think Matt has to go now.
I do have to go. Just quickly want to do UPS. So if you guys will go to UPS very quickly, and then I'll let you guys finish up the show. UPS, and this just feels like a top end of the range, had a great quarter, just locking some profit with what the market was doing last night. But UPS reports $2.28 a share versus expectation of $1.86. Revenue comes in at 21.2 billion versus expectation of 20 billion. Revenue up 15.9% year over year. In my opinion, fairly decent report. This is just one of those top end of the ranges. Market's not buying earnings, lock in profit. I don't see anything really that concerning in the actual raw numbers. Technically, Matt, a little more concerning.
And seriously, and you really were the first person I had, because I consume more financially, the first person that says, listen, these earnings aren't getting bought up. This is really worrisome. And I mean, we see it today in a trifecta of reasonable earnings. Microsoft, amazing. UPSs were really good. MasterCards were not as bad as it indicated. It doesn't matter. They're getting slaughtered on earnings. All of them down bigger than the market. All of them down bigger than the market today.
Yep. And obviously, as we're watching the market reactions to these kind of stocks, I mean, UPS has been a juggernaut for such a long time. Coming in the earnings report, we knew they were going to beat. They did beat. And Mark, we did get the market reaction like you're talking about, which goes to what Matt's been, hinting at from these earnings reactions for a while. Tyler, now you're below the 50. You got some support there, I guess. I love the company. I mean, the numbers were strong. How do you unpack the chart?
I mean, why would you look, this was up so much in the last 2 quarters. At some point, they priced it in. That's just the thing you got to remember and realize. And so it's like, how much upside did you have? Maybe I'm speaking with confidence because we know what happened now, but how much upside did you have really versus downside on a company that's up 150% in the last 6 months? I'm not surprised they're ringing the register here. Look, but at this point, you got to give it time to cook. No way you buy the first down bar here.
What you just said, Tyler, worries me so much for tomorrow. Like, it worries me so much when those big tech companies come in. These companies that are up huge, still at the relative top of the chart. And I just think earnings season, we might look back 2 months from now and like, hey, earnings are okay. Yeah, like, it is just really, really, these earnings are getting killed.
Yeah.
It doesn't matter what the numbers are.
Mm-hmm. Yeah, no, it's true. I mean, except for GE, I did not get killed. Except for GE somehow is not getting killed. You're right though. I mean, Mark, we might look back in a month or 2 months and say, hey, that was a great quarter from earnings. We had 80% beats across the board, all the data that we're expecting to see. And yet the market just did not buy up on that information.
And from a long-term bullish standpoint, this earning, like whatever is causing the sell-off, lack of stimulus, election, COVID, general technical deterioration. It's not earnings.
No.
Earnings have been really, really solid this quarter.
Yep, they've been good.
That's not adding to the bearish sentiment, at least.
Couple more I want to look at from an earnings perspective. Boeing next, if we can. Let's take a look at the stock. Obviously, it's been stuck in the mud for a very long time. Boeing still lost $1.39 per share mark in the third quarter, smaller than the anticipated loss of $2.52. Revenue was above estimates, though. I mean, this has been a struggling company for some time. Mark, anything here from a reaction standpoint?
Now, Boeing is the ultimate reopening play. They have enough defense contracting to, they're not a cheesecake factory. They're not a theater. They're not a carnival where nobody's cruising, nobody's going to the movie. They do have some defense contract money, but Boeing's not going to get back to being Boeing until people start flying and people start buying their planes. And so you're going to have a lot of crappy earnings reports. I mean, they announced 11,000 job layoffs too when they announced that. So, I mean, I think Boeing is symbolic of a lot of things in 2020, and it's still a risky bet. It's
Absolutely.
still a risky bet.
And Tyler, now that we're down below that little congestion zone that it was in, it popped lower. Now we're testing down to some support. It does not look like it when you're looking at the chart and the scale, but stock is down almost $20 here in the last 4 days. I mean, we've sold from near in the high 160s down to these, what price are we at right now? 149. So we're down almost $20 per share, pushing towards support. If you break support here, there's not much underneath it. Tyler, any interest long-term in Boeing? Any interest in the short-term chart here?
Too many better fish in the sea than this one. I wouldn't touch it.
Yep, I agree. General Electric, I've been saying that, by the way, about this next stock for about 10 years, Tyler. General Electric, they actually did report a third quarter profit, 6 cents a share. Is one of the notable stocks that's actually up here today. It had a developing nice little trend coming into this, and the earnings reaction is, giving it a nice little pop here. They were expecting a loss here this quarter, Mark, and they came out with a profit even in a very difficult environment. GE also a reopening play. I mean, so many of the production stuff that a Boeing needs, they're doing it with companies like a GE and whatnot. Marky, what's your read on GE here? Because it's coming off the lows. It did push that resistance.
I'm happy you hate GE, so I made $40 on those naked puts. That's my read.
Yeah.
Listen, GE is one of these companies in which there was some chitter chatter and there was some general and there was like, hey, there's probably some price appreciation. Sentiment was really building coming into the earnings over the last few weeks. So, I mean, is GE going to fly to $13? Very, very unlikely. Is GE going to probably stabilize? Yeah, probably. And so, if you wanted to bottom fish for whatever reason and the market came down, and if you wanted to play a breakout here, I'd be very careful on anything bullish the next week. But in the next week or so, moving averages catch up. You clear that 200. You clear a resistance level. There might be a short-term trade there. Sentiment's reasonably high, and I'll bottom fish it if it ever hits $6.
Tyler, is there a trade here above 8?
Yeah. I mean, look, I think you have to set aside that it's GE, and just if you look at it based purely on the technicals, yes, of course there is. I mean, the volume's good too. The decent volume patterns over the last couple of weeks. It's constructive, but the challenge is, will it get it done if the market remains under pressure with the election risk? Is it worth it? Those things really pour water on it.
Yeah, I mean, and I think it gets a catalyst today because of earnings, but you look at the last 3 days, that's very markety, struggly. I think immediately GE becomes an at the market performer, maybe a smidgen, but it's going to go as the market goes after today. So
yeah, I don't disagree on that.
Absolutely. All right. Last thing I want to talk about here today, actually, are some tech roundup. There's some news items I want to get to. Give me Google first, if you can. Again, Mark, we have a Senate Commerce subcommittee hearing, and listen to the title of this hearing. It made me chuckle a little bit this morning. Does Section 230 sweeping immunity enable big tech bad behavior? Ooh, I guess these congressmen are going to be going after big tech here again today. They're doing it via Zoom.
Named it Peter Piper pecked a pickle pepper peckers. I don't know.
Who named this? Yeah, who named it? It was making me laugh.
Oh my gosh! I mean, that title of that report is why we hate politicians.
Does
right?
Section 230 sweeping immunity enable big tech bad behavior? Obviously, they've been talking about this Section 230 for a long time here, Tyler, and with the election and politics in focus, social media content being restricted or whatnot is a hot button issue among many people. And by the way, there is unilateral support in many regards. I saw some Democrats talk about this, Republicans talk about this. It's mostly a Republican thing in that regard, but is there risk to tech here, over time? We've seen this storyline play itself out for a while, Mark. I mean, what's your read here on big tech?
It's big tech. Listen, wake me up when something ever actually happens. Like big tech, you can talk valuation, you can talk we're in a bubble and things are stretched. At the end of the day, these companies make money and they're absolutely fabulous companies. Now, if government ever did get involved and broke them up, but listen, there has been a lot of smoke and never any fire. So they just create this artificial smoke machines, right? There's never been any fire behind this, and I'll believe it when I see it.
Well, I'll ask you maybe a little bit more direct question. Do you think if we do get, in one scenario, if we got a blue sweep on Tuesday, do you think that would be a catalyst to sell tech? Do you think the market would probably just focus on other things?
What it would probably do in the short term, and I'm pretty confident in this, is create a stagnant environment, right? Where we're so used to tech having these massive runs, probably unlikely to have that smash the buy button on big tech if that's really serious. I mean, I've been saying this for weeks, though, on the tech, just my read on sentiment is that there's a lot less sentiment on tech than there normally is. And I would so I think that's going to happen regardless. And that would only add to that. It's not that tech's going to crash unless the market itself crashes, but it's just probably not going to be an outperformer for the next little while.
Mm-hmm, mm-hmm. And in a very related story in many regards, Apple Computer here today. Go ahead and AAPL if you can here. Apple has been paying Google $8 to $12 billion a year to use their search capabilities on the iPhone when they do it. And Apple actually is now starting to move a little bit towards mitigating that risk if they do have some kind of Google breakup or whatever it might be. If regulators block the partnership and said, okay, you can't use Google because you guys are too tied together, too big, we're going to do some antitrust type of work here. Apple is now setting themselves up to have their own search engine on their iPhones if they need to. I don't think they want to, Tyler. I think they'd prefer just continuing to pay Google and using the power of what Google search is. But Marky, I mean, we're starting to see moves out of companies that might reflect they see a little bit of a risk here. Do you see anything in this, or is this just Apple repositioning themselves a little bit?
No, my biggest concern with Apple is nothing you just said. It's this really pricey still.
Just overpriced.
I mean, you think about it. Like if we go back to 4-for-1 split, I mean, it's still at $450 today, right? Like it's still a very expensive to fundamental stock. And so when you get these environments like we're in, I mean, people aren't rushing in because it's a heck of a deal.
Yeah,
it's a heck of a deal. So that's my biggest concern on Apple right now and has been for a while.
Mm-hmm. Yeah, and technically here, Tyler, we're heading into earnings, obviously, so the chart isn't going to really make an impact till we get the earnings reactions like you've been breaking it down here on the ones that have already reported. We got Apple after the bell tomorrow, along with four big names. The four horsemen, Mark, they are going to be reported. We'll talk a lot about that tomorrow in the show because it is after the bell tomorrow. A couple more here. Amazon, if we can here, Tyler, just one example of where there's always a winner in the economy, Mark. They are hiring 100,000 seasonal workers. I guess if you are looking for a job, look for the people who are still doing a lot of business. Amazon has been one of them. Earnings tomorrow after the bell as well. Caesars, last one for me. Mark, you were here yesterday when we talked casinos. In fact, we had a conversation about Las Vegas Sands potentially selling $6 billion worth of their Las Vegas casinos. Now, Caesars here is announcing today they're selling their Tropicana Evansville casino for about $480 million. Casinos in general, Mark, I mean, is this a sign of something for you? They're maybe trying to reposition. I know Las Vegas yesterday, a lot of the commentary was, we want to focus on Macau. We want to focus on overseas. We want to focus elsewhere. How do you read this here, Mark?
Well, first of all, when you said the Tropicana is the first place I ever legally played blackjack. So that brings back some memories there. I mean, casinos are in a rough spot.
Where's the first place you illegally play blackjack?
Oh, lots of home games and this and that and all of that. So, right, listen, one of the trepidations I've had on casinos for a while is that like these in the line of fire epicenter stocks, like when something's at the bottom and it's cheap and I can cost average down, like movie theaters, they're beat up to could be a lot of the risk associated with COVID is there because they've been beat up. Casinos have had a really good run and are much higher. And like heading into this, they're still relatively close to where they were a year ago.
Mm-hmm.
And that's really, really, like, I really get concerned from a big picture standpoint heading into COVID for these stocks that are elevated that still have all kinds of COVID risk. And so if you have all kinds of COVID risk and you're a lot higher on the chart, man, I wouldn't want to be touching you right now. So.
Mm-hmm. Mm-hmm. Absolutely. I'm with you on that. And obviously casinos, I mean, there's not a lot of foot traffic in Vegas right now. They definitely do have COVID risk.
Vegas is dead right now.
Yep. Couple of charts, Tyler, I want to get your read on as we kind of get to the end of our show here from our weekend's options report and stock report. Zoom first, if you can. One of the only ones I'm still, at least somewhat interested in, man, but you got some funky candles here today, Mark. You've got a COVID day. You've got that type of price action. Zoom's not down heavy, breaking support or anything, but it's down 4% after trying to break out earlier today. Tyler, is there still something interesting here for you? Does that engulfing candle kind of throw it off for you? We are still riding a moving average. I mean, what is your read here?
Well, I think it goes to show how hard it is to make money on a swing trade when the S&P is in a downtrend and weak. More specifically, on a bullish swing trade when the market's weak. This is why when we're below the 50-day moving average on the S&P, less is often more, and you're kind of fighting against the trend. You're swimming upstream, whatever you want to say. Trying to make money on a bull trade when the market's down 3%. It's just hard. And so, yeah, it throws a wrench in the pattern. I mean, it was pretty coming into this week. This was probably the best bull setup, but the market didn't play ball. Now I think, Tim, I mean, you're not going to short it. It's the strongest stock in the market, but if I want to buy it, it's got to take out today's high now. Like that's your new high watermark. Mm-hmm. If it doesn't take that out and doesn't kind of reassert the bull's dominance, I think you stay away.
Well, and if 500 is violated and pierced, I think you got to be looking at a correction from here as well, a little bit deeper for sure. All right, a couple on the bear side, Tyler. Look at Johnson & Johnson real quick. This was a candidate on our option report over the weekend. Simple question for you here. It was a beautiful trigger when it did happen. Now that you've been selling sharply, J&J rarely has a big 3% day. You can't find that many fat red candles on that chart. Now we're pushing towards a new support. Did you miss it if you didn't get in? Number one. And how would you approach it if you did?
My answer is yes, you missed it. I don't like chasing VIX at 40. Market is oversold as it is. I'm leery of new bear entries myself. Doesn't mean it won't work, but I'm picky. I mean, I'm a stickler. If I don't get in at the right time, I rarely chase. The other thing is you're down 4 red bars in a row. Just show me the last time down 4 red bars. The third red bar is down 3% into support. Show me the last time you would have made money shorting Johnson & Johnson with the same setup. If you didn't get in right from the jump, I just think it's a low odds play to try to short it here. I would wait for a new setup is what I would wait for. Maybe it needs to pause for a few bars and set up a nice little low base right at this next support zone. Just because it's not a short right this second doesn't mean it won't be in a couple of days. I think you just watch it for the next swing setup. Tim.
Mm-hmm. And last one here, Wells Fargo, if you can, been a very much a struggling bank for quite some time. We've been watching for this breakdown. I know Coach Frank has been like, okay, when are you going to break down? When are you going to break down? It took quite some time, Tyler.
Oh, financials have had a rough week all around. Even even yesterday's pause days, financials were down big. They've been slaughtered this week.
Mm-hmm. Yep. Mm-hmm. Is there more downside here, Tyler? We've already caught a nice little run here from 23 down to 21 here, $2 on a $23 stock, 8% in just a couple of days. I mean, is this also one where you would just trail stop? I mean, how would you approach this situation?
Well, yeah, I think if you're already in, you trail stop. I don't think I'd let it turn into a loser if I'm swing trading. So if I shorted the breakdown yesterday and it pops back to 23, I'd probably get stopped out of break even. But as far as a new entry goes, look, I mean, again, I'm a stickler. It's down 4 red bars. Am I going to short the 5th red bar? No, I'd rather it bounce a couple of bars or pause a couple of bars and give me a new swing setup. Yeah, it's got more room to go. I mean, how far back do I got to go to even find when the last time it was here? It was back in 2009.
Yep.
What a dog. Yeah, it can go lower. I mean, it was down at $8 in 2009. So it can definitely go lower, but I would prefer I shorted it yesterday when it broke support. And quite frankly, there's not really any excuse when the thing sits on support for 3 months and then breaks. It's not like you didn't see it coming. It's just a matter of whether or not, you set up your trade properly. So if it were me, I would wait.
I love it. All right, guys. That is all I have here for today. Let's get some final thoughts and start wrapping this one up here. Marky, final thoughts from you.
I mean, the thing that when I woke up this morning and saw the market action, my first thought is like, I just hope people weren't over leveraged into this. Like, because it is easy in a FOMO environment, it's easy in a bubble environment for a froth and greed and all of that to take over. And I just hope people weren't. I mean, that is something I preach. That is something I believe in. If you are fit into that category, I mean, 10 lounges, do what you can to ask questions, you're going to lose money during certain stretches. There's nothing nothing wrong with that. But it is just those decisions you make that could potentially get you out of the game. And money management and portfolio management and not being over leveraged. I mean, that is top on the list. So I just hope nobody out there is in there, but spend some time like looking at your portfolio and how to deleverage if that is the case.
Absolutely. Wonderful message. Tyler, final thought from you, sir?
Yeah, I mean, look, have a plan. If you blew out of all your positions in March and felt like, oh my gosh, I puked into the worst part of when I could have done that. This happens from time to time. I mean, if this snowballs into a bigger correction, you have to look at it not as a victim, but somebody who is able to capitalize and look at it opportunistically. You want to be in a position to be able to exploit whatever's going on, and you can't do that if you're always reactive. And so you lay the plans, you be proactive. We don't know what's going to happen with the election, but in the event the market comes down another 10, 20%, I guarantee on the other side of that, profits are going to be made. But you can't make those profits if, as Mark said, you're over leveraged and you panic and you sell everything into the, the abyss. And then you're shell shocked on the recovery and you wait till the market's at all-time highs to rebuy. That just does not work. And so
you might as well just buy the S&P 500 and just hold it for the rest of your life. Like if you're going to get caught up in that emotion.
Yeah. So have a plan. Say, look, if the market goes down, if this is the beginning of a bigger correction, how am I going to respond? Instead of praying every night, oh my gosh, I hope that was the last down day. I hope we don't go down again. That ain't going to work. So have a plan. You got to play defense right now. We're in a downtrend. And until that changes, I would be defensive.
Absolutely. I think both of them are absolutely wonderful messages. And I think my final thought will just reiterate them. Guys, long-term thinking, long-term planning. We're playing big boy markets the last couple of months here, Mark. Incredible run up in August, incredible sell-off there in September. Back on hope. We were running back to the upside, was looking constructive. Now we're back down here. We're looking at support. And on the SPY, obviously still got a little bit of room, but the Dow is flat on support today. Crude is flat on support today. The NASDAQ just barely broke its pivot point, got plenty of room to the downside. And we've got 4 of the biggest companies in the world reporting tomorrow after the bell, and a very important presidential election coming up next Tuesday. There's obviously risk here in these markets, guys. It doesn't mean that you should avoid them completely. You should study them. You should learn from them. You should do planning right now. You should be doing a lot of work this week, quite frankly, even if you do have a larger cash position than you have in some time, because that work and that thinking should be in education. It should be in studying. It should be in understanding, portfolio planning and all the stuff that we've been talking about here today. Because quite frankly, guys, if you're doing this the right way, you're going to be doing this your entire life. and we are talking about what, an 8-9% correction so far. I agree. If you are panicking right now, it was a leverage check, and learn the lesson and come back stronger and build a better plan for the next time this may happen. And we got support in play right now. We'll keep analyzing this on a daily basis. Stay focused on the chart, stay focused on the data, breathe deep, relax, and you're going to be just fine. You're going to be a great investor long term if you can ascribe to the principles that Matt, Mark, Tyler, and myself have been talking about here. Wonderful show.
One last thought, because I had a friend of mine text and was like, I'm experiencing a little FOMO, buy the dip. And I'm like, that would be a brilliant decision if we knew how the next week's going to play out. We do not know how the next week is going to play out. You just don't. It is. I mean, we knew this heading into this week. I mean, that's what we talked about at the weekend prep class, is there is so many ways this can go. Just realize that, you're going to get smacked in the face. This isn't the last day you're going to get smacked in the face. Maybe you're up on Thursday and get smacked in the days on Friday. Maybe, I don't know when the next time you're going to get smacked in the face is. It's going to be a crazy environment. As Tyler said, come up with a plan. And if you are new, sitting this one out is not a bad idea.
Well, and even if, Mark, in a month's time, we're talking about the markets back at a high point because the election had clarity and all kinds of positivity came out. We had great earnings reactions, from Amazon and Google and Apple. And we're like, wow, look at that thing rallied off the 200, rallied off support. That will be 2020 vision looking backwards. That's only one potential scenario, and there are a lot of them. Support being in play here. You could get a consolidation as we test back and forth and it gets choppy. You could even break down further here, guys. So you do have to have a plan on all regards, no question about it. I think that is the word of the day, plan, Tyler. As far as the plan goes, by the way, we do have events tonight, Tyler. You are going to be hot and heavy back from vacation. We put you right to work, sir.
They put you right to work.
Yeah, we
That's
did.
right.
Yeah,
well,
we
after
did.
looking at that chin, and that mustache, it was either put you on 2 shows or have you audition for Super Troopers 3. So
I'm excited. It's gonna be fun. We're on YouTube later today, talking about earnings and how to position or trade earnings, how to analyze a stock ahead of earnings, and then we got the Condors Mastermind group tonight.
Yep. And that 7:00 show, I'm looking forward to. I think it's going to be very, very helpful for a community who doesn't have the skills to assess market maker moves, implied volatility. There's a couple of little tricks, Tyler, that I think once you learn them, they're not that complicated, but they can be very valuable so that when you see a Microsoft earnings reaction and it's down 3%, you're like, okay, yeah, down. We get it, but it was in the market maker move. I have very different mental reactions to price movements based on understanding what they were expecting going in. So looking forward to that, guys. Join us at 7 Eastern. In fact, in the chat, if you're still watching the show right now, if you can help me out, just type in 7 p.m. Eastern tonight, live with Tyler. And that's really all you got to know. Come and join it, and he will make it a wonderful show. Condors Traders, 8:30 Eastern. We have our mastermind group. Make sure you attend that. Other than that, guys, we'll be back tomorrow with our halftime report. We are